at our quarterly earnings press conference. And to those who are joining us virtually, thank you for dialing in. So since the last time we spoke in July, macroeconomic conditions across almost all markets and sectors have changed. In speaking to our clients every day, what do we hear? We are seeing a change in the level of optimism as business around the world are dealing with inflationary pressures, geopolitical turmoil, energy crisis, and rising interest rates. Almost every major economy is experiencing today economic deceleration. It's a fact. And it's against this backdrop that we delivered a strong quarter. Our business strategy is so strong, and our value proposition continues to resonate with clients across markets. This is clearly reflected in robust bookings, healthy deal signings, growth in revenues, as well as operating margins. Let's start. Our bookings in total contract value terms, they grew 24% year on year in Q2. Two of the four markets, Americas 1 and Europe, grew more than 30% year on year. We've said in the past that, I'm sure you remember, large transformative deals are a key pillar of our growth strategy. They allow us to demonstrate the true power and the scale of our services, talent, and operations. Large deals are where we deliver maximum values for our clients. We know that. So I'm pretty pleased to say that large deal wins have continued to be really strong. In Q2, we signed 11 deals with a total contract value of $725 million. And this actually follows an exceptional quarter in Q1, if you remember, when we clocked over $1 billion in deal signing. This strong booking trajectory is clearly translating into a 42% year-on-year growth in our large deal bookings just for the first half of this fiscal year. Over the last few years, we have steadily increased our win rate and improved the quality of our pipeline. As of today, our pipeline, as I would say, a well-balanced mix of transformation, growth, and cost takeout engagements. Now, this mix may change in the coming quarters based on external conditions that I talked about earlier. But we expect continued strong demand for a comprehensive portfolio of services. We know that technology, in good times and in bad, has become the underlying success factor for any business. Regardless of what the problem is, increasingly, technology is the solution. And I believe we're better positioned than ever before to help our clients tap into the true power of technology, whether that's to drive growth and transformation, or manage cost, or actually build a sustainable future. Speaking of sustainability, we continue to build sustainability into everything we do, including across our tech stack. You will see us leveraging our sector domain expertise and strong partnership to develop new low carbon impact solutions for our clients. Our enterprise scaling and sustainability process experience is helping us stand out in the market and leading to strong client demand. Overall, with our deep engineering expertise and comprehensive set of offerings, we are well positioned to be the partner of choice for our clients as they face a growing set of headwinds. Turning to our revenue growth now, we recorded 4.1% growth in constant currency terms sequentially and 13% on a year-on-year basis. That translates into double-digit growth across all markets. Business growth translates into growth for our colleagues. I'm happy to share that we rolled out quarterly promotions to our employees in July and salary increases effective September. And yet, we've achieved operating margins of 15.1%. As we continue to enhance our portfolio with the newer and more strategic service offerings, our clients are recognizing the value we deliver. This is increasingly reflected in our improved price realization as well. These efforts, combined with operational excellence, automation, and higher productivity, are the key levers for the margin improvements. And now, as always, I like to do that. I'll share some finer details on markets, service offerings, and sectors, right? So let's start. In Americas 1, we grew 15% year-on-year in the second quarter, with all sectors showing strong growth. During the quarter, the fastest growing sector in the market was technology products and platforms, which grew 26% year-on-year. Order booking in total contract value terms grew nearly 34% year-on-year in Q2. That's for Americas 1. Now, in Americas 2, we grew 12% year-on-year in Q2. Manufacturing, energy utilities, both led the performance, recording a growth of more than 20% each year-on-year. But financial services grew at 17% year-on-year as well. Now, shifting from America to Europe, our European business delivered a year-on-year growth of 12% in Q2. Most of the markets recorded strong double-digit growth, with Benelux, UK and Ireland, and South Europe leading the pack. Our order book in total contract value terms grew at 36% year-on-year. Finally, our APMEA, Asia Pacific, Middle East and Africa market, our business grew at 11% year-on-year in Q2. Regions that did particularly well during the quarter were Southeast Asia, Australia and New Zealand, and Middle East. Frankly, strengthening client relationship remains a top priority. As a result, we're gaining share in our metal accounts. You know, our metal accounts, our largest account, our top 5 clients grew 19% year-on-year, and top 10 clients grew 17% year-on-year, both in constant currency terms. Now, from a service offering standpoint, remember we have IDs and iCore global business lines. So let's start with IDs. Our IDs global business line grew 15% year-on-year in Q2. No surprise, this growth was led by cloud transformation, which grew 26% year-on-year, applications and data, which grew 21% year-on-year, and finally, engineering services, which grew 18% year-on-year. Now, on the iCore side, our iCore global business line grew 9% year-on-year in Q2. They are clearly led by cybersecurity services, which grew 23% year-on-year in Q2. As the speed of the transformation accelerates, we are definitely experiencing increased demand for our full suite of cyber offerings. We are leveraging internal methodologies, frameworks, intellectual property in collaboration with our technology partners to help our clients manage a dynamic and complex risk environment. In one recent example, we helped a global communications organization improve and automate their compliance processes, leading to an enhanced risk posture. We now operate and execute this program globally, and we have driven significant cost reduction in their security and compliance program. Now, talking about Wipro full stride cloud services, which is more than a third of our pipeline today, it continues to be a driver of our success. And partnerships are at the center of this growth. In fact, in the second quarter, bookings with hyper-growth partners grew 24% year-on-year. Working alongside the partners, we are creating industry solutions and leading major transformation efforts designed to help clients unlock the value of cloud and realize new efficiencies. In addition to modernizing applications, we see a great amount of interest in modernizing data operations as organizations realize the power of data in gleaning new insights into their businesses. For example, for a US-based diversified financial services group, we are working on a digital transformation and data modernization effort, which involves building a next generation cloud analytics platform. The goal is to deliver omnichannel experience that help our clients get better real-time insights into their business. And ultimately, the transformation is helping our clients reduce time to market for new capabilities and deliver enhanced experiences. Yeah, technical issue. Thank you, guys. In another example, let me give you another example. For a leading provider of industrial automation solutions, we are working on a transformation program that will help them become more client and relationship centric. We are building a multi-cloud solution that will transform the firm's marketing, sales, and services around a single client definition, creating opportunities for more meaningful engagement with customers. We continue to double down on strategic investment in areas that we know will drive long-term competitive edge for us and our clients. For example, recently, we launched Lab 45, a new brand for our city organization. Lab 45 is a new direction for our technology research and development unit. It will develop new assets, intellectual property, and products through clients' collaboration and partnerships. Lab 45 will help our client build new businesses, model, enhance user experience, and drive growth through enterprise technology. In fact, the opportunity to tap into our expertise and world-class talent through Lab 45 is already factoring into client decisions and making an impact on how we win in the market. We are continuing also to expand our capabilities in strategic areas, such as artificial intelligence and data, 5G, metaverse, IoT, Industry 4.0 to help clients gain new competitive edge. I now share a view of the talent landscape. We need to discuss about that. I'm happy to share that our attrition has continued to moderate for the third quarter in a row. In Q2, attrition was down to 23% on the trailing 12 months basis. And our quarter annualized numbers are trending even lower than that. We expect a further moderation in Q3. Like I had shared last quarter, we are now offering promotions to our employees every quarter. And in Q2, we promoted about 10,000 colleagues. I'm also pleased to share that the annual salary increases were given to our colleagues across bands in Q2, with a steep differentiation, as it should, in rewards for our top talent. We have also onboarded over 14,000 freshers in H1, which is over 72% of what we added in the whole of last year. And finally, I will share an outlook for the next quarter. We've guided for revenue growth of 0.5% to 2%, which will translate into growth of 10 to 12% year on year in constant currency terms. This guidance reflects the current environment and the quarter seasonality. For the full year, we are certain that we will report double-digit growth. Our margin in Q3 will have some headwinds. There's the impact of 2 incremental months of salary increases, and yet we expect to hold our margin in a narrow band. In summary, we have delivered a strong performance against the backdrop of what I would call a mixed macroeconomic environment. Our order bookings and the large deals reflect an improved market competitiveness and frankly prove that our strategy is working. We're experiencing a real shift in the market as clients increasingly turns to us to realize their boldest ambitions. Based on all these factors, we remain confident of gaining market share in the coming quarters. Now, I'll hand it over to you, Jatin.
Thank you, Thierry.
Comments. Thank you.
So we had a strong quarter. We had 4.1% sequential growth and 12.9% year-on-year growth. Our operating margin was 15.1%. We mentioned we will hold and improve margins, and we have given a small improvement. Our ETR was 22.5%, which was an improvement of more than 1 percentage point compared to the previous quarter. Our net income grew 3.7% sequentially, and which I think was a healthy growth. Our cash flows came very strongly. Operating cash flow to net income was 181%, as a result of which we had $4.3 billion of cash at the end of the quarter on gross basis, and net of that, it was $2.2 billion. Overall, Forex was a good movement during the course of the quarter. We had a realization of 79.93, and we had, at the end of the quarter, hedges worth $3.8 billion. So overall, a very strong quarter. We have guided, as Thierry mentioned, 0.5 to 2% sequential growth in the currencies that we have mentioned in our press release. Thank you, and we'll be happy to take your questions.
Please introduce yourself and go ahead and ask a question.
Hi, my name is Ritu. I'm from CNBC TV 18. We saw you outline the environment, which we understand is difficult right now, but your guidance, 0.5 to 2% that you've given, is seen as certainly modest compared to what the expectations were, perhaps closer to 1 to 3%. So a sense on that, if you could give us. Secondly, your margin breakup, 15.1%, the gains, where they came from, and your medium-term guidance of 17 to 17.5%. What is the sort of trajectory towards getting there? A word on the third quarter, what you're expecting in terms of furloughs as well, given what is going around. And lastly, if I may add, a word on your hiring as well. I know you said attrition has been moderating quarter on quarter for the past 3 quarters, but you're hiring about 600 for the quarter, we understand, is slightly lower than what we've seen in the past few quarters. Is that because you'd already anticipated the demand and hired, or do you see weaker demand going ahead? Thank you.
Okay, so I'll because turned off. Can you hear me? Okay, all right, okay. So thanks for the question. I'll try to remember all the points, okay? So the first one is about the growth outlook, okay? We try to keep a balanced view as to what we are seeing. On one hand, we have great performance in bookings. I mean, we have delivered outstanding performance in Q1. outstanding in Q2. You know, I mentioned the percentage of growth, you know, over 40% on the larger deals. So outstanding growth. And what we are seeing for Q3 is very promising as well. On the other hand, we are talking to clients every day. And what I'm hearing from clients is that, you know, everything we know, that, you know, there is a certain level of uncertainty. And so as we are looking at it and reflecting, you know, and as we are looking at Q3, you know, we reflect on this level of uncertainty. And that's probably, you know, you might feel that we are slightly cautious. And we'll see. But I think, you know, I think we are acknowledging the fact that we are in a time of more uncertainty, that the market has changed compared to a year ago. So that's the first point for the growth outlook. Having said that, we still you know, shoot for double-digit growth, which is what we've said. So it's, you know, it's not changing our growth trajectory. Point on furlough, you ask about it. Yes, traditionally Q3 is the quarter where furlough happens. And yes, we are seeing that there are furloughs indeed. And we are taking every situation one by one with clients. So it's here again, it's slightly difficult to really say, it's not necessarily worse than other years, but we just need to see how we can, and we will handle it over the next months with our clients. So that's for that. For the margins, a quarter ago, you know, we communicated that 15% was our bottom, right? That we considered it as the bottom, and we knew that it would take a couple of quarters before we can start to improve the margin. We've delivered 15.1%. I think we follow this same line. You know, we'll consider that this is, you know, our level. We'll trend from there, but you should not expect major change from that point in Q3. So what we've done, okay, yeah. So what we've done, remember, in Q1, we had done an exceptionally high volume of hiring, okay? And we had said in the communications that, you know, to you that we did that because we had a huge amount of demand, but we knew that it would take a couple of weeks before we are, you know, getting all these talents utilized. And that's what we've done throughout the Q2. Also during the Q2, we've really, following our strategy, focused on hiring freshers. And we've onboarded, you know, several thousands of new freshers, and we continue this strategy as well. So I think it is, you know, we'll continue to follow this strategy over the next quarters. You know, again, you know, we certainly have in mind that there is a certain level of uncertainty that I was talking about, okay? But at the same time, we have a great demand. Our demand doesn't go down. So that is the context where we are right now. Who's next?
Congratulations all. My name is Tushar. I'm from Financial Express. I want to understand from you your 5G play, right? I mean, you did have a passing mention of it, but I want to understand how you're leveraging that opportunity, and are you in talks with clients? Are you buying the spectrum from governments? What is the talk, and what is the revenue opportunity you have from there, please? Thank you.
You know, it's obviously 5G is a massive area. You know, it is a significant investment for some of our clients or for partners of our clients, okay? There's billions of dollars injected in 5G, which will transform the way we are dealing with data, you know, over the next years. We have been early investors into this area, you know, working with our clients, developing specific solutions, and helping them also define their own strategy. Take an area where 5G has already a lot of applications is around the world of digital manufacturing, right? The ability to leverage the speed, accelerate the speed of data and volume of data in the manufacturing world will transform the way manufacturers are driving time to market for their products. So we are investing in these areas. We are looking at potential acquisitions as well as we go, and we'll continue to certainly also. We've also really developed. We've built a unit. We have developed capabilities. We are hiring talent. It's one of our hot markets at the moment.
Are you in talks with the government for a spectrum?
Say again?
Are you in talks with the government for a spectrum, 5G spectrum?
No.
All right, thank you.
Hi, good evening. This is Haripriya from Money Control. You spoke about macro uncertainties in your opening speech. I wanted to understand, are you seeing any change? I mean, in our clients' experience, talking about caution, is there like a change in tone? Are you seeing any delays or deferrals in projects, mega deals drying up? Anything on that front, if you could give us some color. Also, I wanted to understand, because of margins, variable payouts were cut last quarter. What does that scenario look like for Wipro this time? And headcount addition, you obviously spoke about, how freshers have obviously 14,000 the first half, but there've also been a lot of complaints about why onboarding's been delayed. Can you give us some color on that, please?
Yeah.
Thanks.
So again, coming back to the market, you are reading the newspapers, right? You see what's going on in Ukraine. You see the oil crisis. You see the slowdown in America and in most of the economies. You see the interest, right? Inflation and so on. It's a reality. And I am speaking to clients every day. And I know Stephanie does too. So we are hearing our clients, and I think our job is to listen to them, because they are telling us, what's happening. Today, they're not saying we cut spending on technology. They're not saying that. They're saying we don't know. There is a level of uncertainty. And I feel it's our responsibility to be honest about that. I think there is indeed a certain level of uncertainty. As most of the time, a war drives uncertainty, right? This is pretty much what's happening. So are we seeing a slowdown in demand? Again, I don't think so. Our pipeline is not lower. And, the projection of bookings for the coming quarter are actually strong. Is there a slowdown in decision process? It's difficult to qualify. Are we seeing it sometimes? Yes. I take an example. I believe technology companies, large technology companies, are slowing down. And I think it's a reality. So we see that in some pockets. Is it widely spread? Too early to tell, honestly. So we stay vigilant. Hence, maybe this caution, but that's, I believe, important to stay very close to the market to understand it. You want to take the question, Saurabh? Huh? Oh, yeah. So you ask about variable pay? Okay, variable pay. So every quarter, depending on performance, variable pay are better or lower, right? I can tell you this quarter, I believe 85% of our employees will get 100%. Hiring, I just want to respond to you, and to some articles I've read. We will honor every hiring offer that we've submitted. This is us.
Hi, this is Sai Ishwar from the Economic Times. So I just wanted to know on the deal front, the large deal number has fallen down. So how should we read into this? Are companies breaking up the large deals and giving it into a smaller deals? And also the nature of deals. Are we seeing more of cutting kind of deals because of the environment?
Okay.
And one more question on, there's a lot of buzz around moonlighting, right? So there are also reports saying that around 300 people were fired. So can you give more color to that? Have you brought in more protocols, more safeguard procedures to prevent such events?
Okay, so I'll start on your first question, then I'll ask Stephanie to continue, and then I'll come back on the moonlighting. And you can add something if you want, okay? But I like to cover those 2 points. So the large deals, it's actually, it's not going down. It's just that, in Q1, it was even higher. But we actually have more large deals in our pipeline than ever before, okay? Turns out, this is the reality of bookings. From one quarter to another, you might, depending on one deal or two, sometimes you have an up and down. But the reality is that you should look at the performance on large deals in the first 2 quarters versus previous, plus 43%. That's outstanding. So we have more large deals than before. Are they sometimes chucking pieces? Yes. We've always said that. Sometimes it happens, sometimes it doesn't, okay? But I'm actually quite confident on our ability to continue to win large deals. You want to? On the nature of deals that you ask as well, yeah.
In terms of our strategy around large deals, it's working. So we implemented it when I joined.
It's not working.
So our strategy around large deals is working. Our teams are in place and they're executing in the market and working closely and co-creating with our clients. The other thing that is important to note is the quality of the large deals that we're doing. While certainly there are large deals where clients are looking for vendor consolidation and cost takeout and streamlining, a lot of the large deals that we signed this quarter were really transformational deals where we could really bring all of Wipro together to deliver an outcome to our clients. So I'm really pleased not only with the performance that we've had and the performance I project we'll have this year, but also in the quality and the mix of the kinds of deals that we're doing. So very, very bullish about our strategy there.
On moonlighting. So, we have a pretty clear position at Wipro that, we are taking pride of the fact that we're keeping commitment with our employee and expect the same. There are contracts. Contracts have to be respected. In particular, when people are, going for another job that has a conflict of interest with Wipro. How can we accept that, frankly? So yes, we don't accept that.
Hi. Hi, this is Narayankar from United News of India. Taking further that on moonlighting. See, look, there is a divided opinion on this issue. For example, Zomato and if I'm right, and some other companies are okay with it. So there is a thought process in those companies that moonlighting is not illegal and free of security issues. So also, not only that, the legal experts are of the opinion that moonlighting related issues cannot withstand the court of law in the country. So I would like to, have a very general question. It is a big debate going on. So I frankly expect a detailed answer from.
I'll do my best. Okay. So look, I completely respect what other companies are doing. At Wipro, again, there are contracts where we expect our employees to not only dedicate time to Wipro, but also keep time for themselves and for families. We're perfectly fine with someone having, a little side job here and there. It's different if you're working for, a company that is in our environment, for example. So it's not a question of legal, it's a question of ethic. You know, we don't believe that it's right to have two jobs having a conflict of interest. Now, if other companies have no problem with that, respect that. But also, we are not doing anything new or different. You know, it's clear to our people when joining Wipro. Oh, I hope it was clear.
No, anyway.
You may not like it, but
No,
it's our
anyway,
answer.
see, you're talking